Parabolic advances usually go further than you think, but they do not correct by going sideways. Bob Farrell's rule number 4. This is one of the most true things that we are seeing in the markets right now as Wall Street went completely bonkers on Jerome Powell's speech. Yes, it was rotation across the board, and everybody is now expecting more rate cuts than ever before. Hello, ladies and gentlemen, and welcome back to The Daily Show, where we discuss markets around the world, including stocks, commodities, and cryptos. Today, we talk about the Fed predicting a slower economy but no recession, the chance of 6 rate hikes with one coming as soon as March 2024. Will Bill Ackman be correct? And of course, what's going on here with a parabolic market movement? Yes, it's gone into the twilight zone as we saw rotation hit its strides with massive moves across so many of the market sectors we've been discussing recently. We've also seen a huge rise in IWM, and it's time we discuss these markets. Let's get into it. Well, welcome back, everybody, to The Daily Show. We've been running this show for over 3+ years. My name's Tom, and if you like anything to do with markets, remember to subscribe and smash that bell icon. Let's get into what happened over the last 24 hours. It was wild, and it wasn't in the stocks that you would think it would be. You know, Microsoft, 0%, Nvidia, Apple, Amazon, Tesla. The Mag 7 were not leading. It was rotation, rotation, rotation. So let's break down what was really occurring. Some of the sectors that we've been talking about recently had a great session, and some of them were getting close on putting on the average return for the S&P over the whole year in one day. You can see when Jerome Powell was coming out with the speech, we had a little bit of an injection coming through into the speech itself, and then after he said stuff, everything went ballistic. Clean energy was the number one leader. Gold, thanks to yields really getting pummeled, and we'll talk more about that soon. That was a big leader there. And we had, of course, regional banks doing well, solar, and one of our favorites recently, which has been biotech as well, leading through. Now, that takes us to a 5-day rotation of semis still being number one with the breakout there, but biotech not far behind with a 6% move. Now, this is the key. Rotation has been one of the things that we've seen a lot in the markets over the last month, and it continues to bring that breadth more into focus. If you're interested in more charts like that, make sure to sign up to our free weekly VIP newsletter, and we'll go through some of the stats moving forward into 2024 that could suggest that we're going to continue to see relatively strong rotation due to them being laggards. So what was the big story? Well, it was 6 rate cuts now on the horizon according to the market, and 3 according to the dot plot. Let's break it down. By March of 2024, a lot of people are now expecting 67.4% expectation is that we'll get rate cuts. Economists don't believe that's going to happen, but let's face it, the economists are often wrong in this situation, and it does look like we're going to get quite a lot of cuts. So the probabilities change drastically, leading to, of course, anything that's rate sensitive having a great session. We also know the dot plot came out and basically confirmed what we already thought, which is 5 times to hold. That's 100% track record of being able to see effectively the next move by the Fed being a rate cut. And they've gone from 2 to 3 now in 2024. So even the Fed's getting on board the idea of many rate cuts. This is just a chart I thought I'd open up still so that we can see it, which is obviously performance just surrounding December quad options expiration, which is the quad witching. If it's going to be volatile, it's generally -1 day, which is the Thursday. But this market just turned parabolic, which is why I put that quote in, because that quote is really the truth. When you go parabolic, think about crypto, think about some examples that you might have seen, oil only a year and a bit ago. When something goes parabolic, it doesn't tend to end well, but calling the top on it is very, very hard. So you kind of want to ride until you see something really happen. And that's been the consistency with the dull market as well. Now we're in over standard deviation moves, which we'll look at later on in today's video. This is also something that I think you should keep in the back of your mind. When we see a market so bullish, we have to step back a little bit and say, okay, we could be FOMO, but we really want to be thinking about what is the main objective. What are the undercurrents? What are some of the problems that we might be seeing? Now, Mike Wilson has been one of the biggest bears of the market in 2023, but I think he has some good points. And he says here, divergence between earnings revisions, breadth, and returns has also opened up. Here's the S&P 500 price, and of course, earnings revisions breadth which has actually been decreasing. Now, we haven't really seen one of these for a while, and it does make you start to wonder what happens when we actually see the rate cut come through. And we've already talked about the idea that, yes, the Fed believes it's a soft landing, but really you should be more terrified when the US 2-year and the 10-year uninvert. And that's going to continue to be, I think, a big storyline moving forward. Liquidity has been rising since March. We've talked about this quite a lot. This is only one of the stories, but again, Mike Wilson's kind of pointing out that actually liquidity has been fairly strong. I would like to think we've been discussing this on the channel for quite some time. Our central bank liquidity indicators have not shown really a significant slowdown, and in fact, they've been very supportive to the market. So Russell 2000 versus S&P 500, seasonality since 1980. Not a new thing. We've talked about this a lot. December tends to be a good run into Jan and Feb, but of course it can be broken down even better when you start looking at the stats. Another thing I think when we're talking about seasonals is to discuss the 4-year presidential cycle. Generally mid-cycle, which is of course 2022, mid-cycle slowdowns are common. 2023 has been a bumper. And when we have a bumper return, remember, if we get over 15% for the year end, usually 2024 can be quite good as well. I would not expect, though, 2024 to be without its hiccups. So I think it's going to be a good trading year, which is, always nice to see. So definitely subscribe to the channel if you're interested in that. December the 11th to February the 11th. What happens? Small caps versus large caps. We reported on this in the previous video, 8.1% return. I mean, it almost did half of that in one day, but generally speaking, it outperforms the S&P 500 over this period of time. And we've been talking about it a lot. Of course, here's a chart from the Stock Traders Almanac, which shows you that usually it happens through the mid of December, but it looks like this year, maybe all we got was that little miniature pullback before, of course, what we're seeing right now, which is a parabolic market. Do remember as well, markets can remain irrational longer than you can remain solvent. So that's something that's important to keep in mind. Here's another chart that supports IWM, which is, of course, this huge amount of calls everybody's been talking about. It turns out that when we get reads like this, we actually usually have a bullish intention on Russell 2000. Here are some of the previous reads, and it tends to lead into gains for that particular pair. Now, again, I don't really like the Russell 2000. I've consistently said the better mid caps are the way to go and small caps, and that's because the market tends to perform off really good quality companies. Let's be real, there are some absolute horror shows in the Russell 2000, probably hundreds and hundreds of zombie companies throughout that 2000 read. Options retail. Now, this is where it gets interesting. Seasonality, yeah, that's one thing, but number of options trades as a percentage of total orders, retail starting to become a big part of it again. Now, traditionally, when you start to get up in these signs, that's when you're going to need to get a little bit careful. And remember, we've got a new sentiment report coming out in only 24 hours. And once we get that sentiment report, what we're looking for is a 50% plus read on the bull side. That's going to make you really start to question some things. We also need to see retail traders stop heavily shorting the futures and CFD contracts. So at the moment, I've been reporting on X very regularly every 2 to 3 days, and we haven't seen a slowdown in that just yet. So let's go through some other stuff. What could happen when the Fed actually does the rate cut? Well, there are two scenarios. One is bad when we go into a recession. The market will tell us that because it will start going negative. And in previous times, if growth actually is there and earnings revisions are bullish and everyone's feeling great about the world and it actually is good, then we should continue to drive higher, bringing in a pretty strong 2024. Here are some of the exhibits taken about a week ago or something in terms of the laggards. So these are some of the market sectors that could be picking up throughout rotation. And we certainly saw a lot of those come into play over the last 24 hours. Let's not forget the Grinch, though. This is great work by Wayne. I really like this stat. I think it's awesome. So 3 days before, we'll keep doing this, to 3 days after Christmas, I want to know what the Grinch does. Is the Grinch positive or negative? It might be one of the determining factors stacking together of what happens in 2024. And I'm going to be on the outlook and I'll look out for that, and so should you be. These are the shares, of course, to do with what happens in OPEX week in general. And so far, it's living up to its expectation as a bullish event. And it's not just bullish, it's super bullish. That's what's actually happened here. Mag 7 US single stock net exposure. I just thought I'd leave this chart in here so people that are new can vision this. We have actually seen a weakness in the Mag 7 because, of course, they pushed that first. And then what happens, a lot of retail traders jump into it and say that this is like an excellent type of time to get into these big stocks. Well, actually, it's been a rotational time. And we've been talking about mid caps and small caps for a while now, and they've really come into their own over the last couple of weeks. But yeah, Mag 7 still struggling, still kind of sitting there doing not much. Was there any real unusual dark pool activity? Not really. So I thought I'd put in this thing with, of course, Moody's downgrades and why economists often can be quite incorrect. Every single downgrade in the past for this particular market has led to the next year being quite positive. And I think it's something we'll be talking about in 2024, and that will be the Chinese market. All right, let's scroll down here and check out what's happened with unusual activity. There were some pretty wild trades coming through. Of course, we saw massive options volume, 49 versus 39. Whoa, that is huge. That's one of the biggest daily reads we've seen in a while. 59% calls. Everyone's been stacking calls. We are Parabolic, and we are at a time. It just doesn't usually end well. We'll go through it soon. But anyway, regardless, it's on the trip right now in terms of what's happening. Single legs retail makes up 25%, and you can see here the unusual options volume, but it was strong call buying on things such as the Russell 2000. We really saw a massive call pickup versus puts, pretty equal on S&P and Qs, and then we had just unusual activity almost through every one of the stocks. Have a look at that chart if you're interested in pausing it right here. Let's get into the charts though now and talk about one of the worrying signs, and then the rest is all pretty good for now. First up, we've got, of course, effective yield. Now, effective yield did go up a little bit, so we need to keep watching this chart. This can often be a precursor. Again, it's just an early sign. We've seen a couple of upticks that haven't followed through, so we'll be watching, but we are parabolic in the market. You can see that. Let's have a look at equal weight, one of our favorites recently. Equal weight has been doing incredibly well. I mean, that thing is just blowing out. Now, you can see it's back at the resistance high, which you could say, oh, it might stop here. I'm not so sure about that. It might keep going for a little bit here. It's possible we even go to 158-ish level. I'll mark that up because I think there's a little bit more to go when we're talking parabolics. We'll get on to why we're saying parabolic and why we're saying big ranges are going to be the key here. This is our bond indicator, which continues to be bullish. This is, of course, US 2-year versus 10-year, which dropped. So we saw a drop here. Remember, we don't need to be worried technically about the market really giving us a proper crash until this thing goes underneath 1. That's when you should be terrified. At this point, we're not going to be. XLY versus XLP, that continued to hold up. So we saw that pretty strong. And this came true as well. So in the last 24 hours, I mentioned how there was both a bull and a bear case scenario, and I would take bull position here and a bear position here in terms of yields. Yeah, usually the reason you do that is because, one's going to lose, but the move's going to be significant, and it was significant. Now, earlier this week, I put out a newsletter where I talked about this downward trend, and I said we have the first signs of possible recovery. If the inflation had come in strongly, I still back that this could have gone 4.3 plus. That would have been a track for the market to go down. But of course, it's just the first time frame. It's not enough usually to go off fully. And we were looking for that 4.3 break. And I guess it really brings in patience, react, don't predict is really one of the keys here. Rotation has been the best play, and it's been fairly consistent. Let's have a look at the US 10-year. It's just dropping off a cliff, and that's leading into some big moves. Let's talk about them. This is definitely a fail. Okay, so this is treasuries. There is a little island reversal here in the supply. I wouldn't have blamed anyone for having a go at shorting it. I don't technically trade treasuries, and I've said that many, many times on this channel. The reason why is quite simple, because treasuries are generally an investment vehicle. Now, we are bullish into these in 2024, and we always have been, because, of course, we saw Wyckoff's third law, which is effort down the bottom. And I'd like to think that when we started to see, remember, outflows, funnily enough, we had outflows from all these big hedgies supposedly getting out of it, yet it's been running up. And I still think that for 2024, it's going to be strong. I would like to see some supply kind of turn, because that would be healthier for the market. But the market doesn't look like it wants to react healthily. And we'll talk about that soon. PCC not helping in the middle. Again, pausing is not really showing us any weakness or any strength. When it comes to home builders, they rallied to a new high. They're at an all-time high. Everything looks green and peachy for these. You can see a big movement out here after that consolidation in time, which is what really a market sideways is doing. What about the Fed liquidity and central bank liquidity around the world? I still think they know something's kind of broken in the back, because why are they injecting and letting this market run out? You can see here that we had similar times before where you actually have, very, very strong movements up, and we had, a couple of injections this year. Really, I think what happened in March could have crashed the market, but you can see this injection from the Fed. They've been pretty consistent. They let it go for a little bit, bringing it back down, and then they started injecting again. Notably here with this first rally, it gets a second drop, and then it comes up. Until this turns down in a big way, again, we're not necessarily that scared. Copper held its own, no breaks past 3.86 though, so we're still looking for that to see copper really rejoin the rally kind of situation. And dollar index got flogged. So of course, yields up, dollar index down. Now, previous video, we talked about US oil and how that usually bought dollar down over the next 1 to 2 weeks. Well, that's a pretty negative looking candle. Of course, there could be some pickup first before it goes lower. But if the dollar gets through here, expect the US dollar to actually get hit more and more and more as it gets priced in that in comparison to other countries, rate cuts will be bigger in the US, and that's going to hurt the US dollar, which actually Druckenmiller also called early on this, although it's been up, down, and all around since that. Let's talk gold. Gold's back in a supply zone, so you can see here the previous shorts came through in this area. Very hard to short into such a bullish kind of move here, but really gold was just a beneficiary of US 10-year dumping off. We've talked about that many times. I'm not sure if gold will fully make it back just yet. Of course, I am bullish on it into 24, which we've been, but I still think it will probably chop sideways. This is where day traders will look for towards shorts, but you're probably going to need some structure after such a big move. US oil, interesting. It held up. Now, usually, traditionally, if yields were going down, oil should have got smoked, but it didn't. And I think that's a lot to do with oil being in this critical key zone. And if you actually notice on the small time frames, oil even presented a small time frame long over the last 24 hours. So it's kind of, I still think chopping. We've got our alert here at 72 a barrel. And yeah, if it does pull back, there could be a little, again, upward trend kind of trade here coming back off this roll reversal and in that zone. It's all very small time frame stuff though. No really big read. The trend is in a key level, though, for demand to come back in. Let's talk markets now. Go single stocks first, then indices. Tesla goes down, holds the 230 after that negative news of recalls and everything comes out. Then it rallies back up. Strong move, holds itself again in the coil. No breakout, but we'll be setting alerts. You notice actually triggered my alert to the downside, but I do like to wait for a bit more closure. So we're going to set another alert because if it does close underneath, then we know what it's doing. But at this point, it was down until Jerome put the rocket ship under the rest of the market. Will the semiconductors flag come true? This thing just keeps running. So semis having a really great 24 hours, but biotech really, I think, presenting amazingly. This thing just rallied. I mean, it's a pretty nice move, really, when you think about it. But that's a strong pickup into, of course, the supply. Some other ones that were notable, clean energy as well, which you can see here is trying to break out. These have been beaten down sectors. And, of course, solar that we've been discussing. There's a lot of volume in solar at the moment. Has it bottomed? What do you think? Let us know in the comments down below. German 40 keeps pushing up. Now, I did mention that I thought that this might actually chop in the sideways action. I didn't want to short it, of course. I'm not going to do that. I'm not going to short the dull market. That would be stupid. But the German 40 is one of the most aggressive markets of the world right now. So I am still looking at it and we still pay attention to it. No signs of weakness yet, but it actually hasn't gone the same kind of parabolicness than the US market has. So let's check that out. First up, US 2K. We had 1920 as a possible target for longs. It just shredded. It shredded that zone. Now it's going towards 2000, you would think. There are little signs where it stopped right now, right here in the futures trading action, which you can see it's got into that 1960 I had. But really very, very difficult to call the top on any of these at the moment. And we can see here the Australian market also going into a bit of resistance, but very strong. The inverse head and shoulders here that we spoke about a while ago now, that has almost come to fruition. So you can see that the fruition is really that 74.50 zone. So still a little bit of strength coming through on that one, you would think. And the NASDAQ and S&P have gone full-on parabolic. So NASDAQ's close to all-time highs. Now, you could mark out this all-time high here on the futures as an interesting zone, and you could also mark out this high here as an interesting zone, just to see on a day trade perspective what you might be looking at. So you can see here, and these are levels that I often do just target. Just have a look, see what happens. If you get a replication, sure, that's cool. If you don't, oh well, that is what it is. This is moving pretty heavily, but I want to talk S&P 500 because S&P 500, notice this candle here. And more importantly, let's just look at the futures candle. So we can see here the weekly. See how this weekly is very large. Now, it's unusually large. And if it keeps going for the rest of the week, it's going to turn into what we would call a parabolic trend. And it already looks like it's doing it. Now, parabolic trends, as we said in the start of this video, and this is full circle, they don't tend to end in sideways movement. So if we keep getting rallying, if we keep getting this extreme movement, look, I know for some people, they really want to be bearish this market. You can't really call the high on it, but when it gets hit, it get hit crypto style, yeah? So if you think about it, we've had similar times such as this where we've gone parabolic. This was actually a fairly decent parabolic. You'd see the wick came off it. But there were times even back in 2017 where you can see here we started getting these huge candles that were much bigger. Look at all the candles preceding it. Then we had 1, 2, 3, 4, followed by a crash dump. Now, you might not think that's much, but this crash dump was in the vicinity of 12% in only a week and a half. So it's still a very significant, took off most of the parabolic move. So you've got to be very, very careful in these markets. This market is parabolic. I was talking to a few old school TA guys today, and we all came to the conclusion that that is a big thing here. And this is actually a positive sign if you want bedlam, because this is the type of thing that happens when things go bad eventually. But to say when is going to be, timing is everything when you want to be right. Very difficult to make the prediction on that. Of course, we've marked out 47.76 as a level. We've pinned 4,700 this week, which was the top end gamma level for the options coming into OPEX. So we're kind of sitting around that already. I'm super interested to keep following this chart because the way this is playing is very reminiscent of other markets that we've seen before. And yeah, for many of you, it may be one of your first parabolic trends. Let's talk about it just in the perspective of also what we saw with Bitcoin. You can see here, that's pretty much what it's done. It goes up, and you can see there's two massive candles. Everyone gets excited, goes into a bit of a chop, and it dumps off. Now, Bitcoin's come back up to 43 and a bit. So let's look at it on small time frame here because, of course, we want to be doing that. And let's check it out here. So you can see that 43.5 that we mentioned in the previous video did get some reaction. Okay, yeah, it's not 43.5 exactly, guys. It's 43.464, but it's pretty damn close. And we see a little shooting star there. So if bears are going to take control of this one, they're going to try it here at this point in time. That was a pretty strong breakout of the downward trend line. You can see it goes to 43.5, which is kind of the level we expect bears at. And if they get pushed and it goes and closes above this 43.5 level, I wouldn't be surprised to see the 46.48 that we've discussed a few times. The S&P 500, though, I want to reiterate this. This is an unusual time. You are witnessing a very serious kind of trend here in terms of the way that this thing's gone parabolic. You can go back through and look at your history, and you'll notice it's not very common. It is an uncommon time, and unfortunately, it's reminiscent of many bad things coming in the previous history of when you go parabolic. But many people will be absolutely FOMOing out of their minds right now. And I think the key is that it's not so much about the indices, it's more about the rotation plays. And the rotation plays have really done you better and allowed you to get into this movement. So a few people in our Market Masters Club, we've been discussing this. We've really been rotating fairly heavily from down here. And the reason why is because it's much easier to get into the rotation plays because they actually provide nice technicals. Now, you might say, well, Tom, this is the best technical I've ever seen. It just keeps going up. My bags are full. I just buy calls and I make money. Yeah, very hard to replicate that, though, because this is actually not common. And that's what I want to talk about. It's not common. It's an uncommon type of market that does happen from time to time, and it doesn't have a pullback in it. It only has pullbacks in time, which are these consolidations. So look, stay careful out there, guys. Obviously, we don't short dull markets. We also don't tend to short parabolic markets. And if you are one of these people that wants to short these things, it's going to be day trade only with proper stop losses like you would have been doing in certain areas, such as even here, if you were doing it. You're probably going to lose a lot of those trying to get against this market. But remember, options is also one thing because at least then you don't have a stop loss. I don't know where this thing's going to stop just yet. I don't think anybody really does because when you go parabolic, this takes time. But I'm pretty sure once it does occur that we'll actually start to see a bit of a decline on the market. So whether that's a new high or whether that's 47.76, or whether that's, right here. When it gets brutal, it's going to get pretty crazy, and expect vol coming through. It may be 2024 by now. We're also going to look for that Grinch. So remember, the Grinch stat is a great one, and we'll be paying attention to it. Thanks very much for watching. If you enjoyed today's video, please remember to subscribe. Check out the VIP free weekly newsletter in the links in the description down below, and we will continue to follow the markets together. Be careful out there, guys, and definitely follow us on X as well, because we'll be sharing some great charts moving forward. Bye for now.